All right, just a quick update today. Markets are closed. This is Monday, June the 20th. Traditional markets in the United States are closed today, but the crypto market, as you know, is 24/7 and it continues to go on, and Bitcoin is rolling along. Nice little bounce here. Let's see what this was. Right now, it looks like 19% bounce. Nice little pop there. The last bounce we had was Bitcoin bounced about 14% right over here. So this structure here looks a lot like what happened here. And this is where it gets a little tricky. So the bottom is definitely not in yet because financial markets have not bottomed yet. And it is a global situation: inflation, recession, quantitative tightening. It's a global thing that's happening right now, and it's all connected and all tied in, kind of like a round robin. And this is news out today. This is Reuters not cooperating, but Christine Lagarde came out today and said the risk of an abrupt correction on Europe's financial and housing market is high, and risks to financial stability have perceptibly increased since the beginning of this year, she said. While the correction in asset prices so far has been orderly, the risk of further and possibly abrupt fall in asset prices remains severe. So remember what I've been talking about in the markets when I show you these sell-offs, how orderly and calm that these little sell-offs have been. And it may not seem like that, but it really is. It's just levels to level to level, right? This is the Do Kwon area here that kind of messed everything up when he was just buying all that Bitcoin. But in crypto, it's just been, from one level to the next, just kind of unwinding, slowly unwinding, the whales kind of distributing as we go. And now the miners had to come in and do some selling. And then of course there's people, long in the market. So, you're getting liquidations, but basically, if you look at this, I know some people are calling this a bottoming structure here just because of, if you look at mid-cycle Bitcoin or altcoins or whatever in the past, it'll bottom, bounce back up, consolidate and move on. We're in a very different situation. Okay. We have quantitative tightening. We have interest rates. The Fed has just gotten started. They haven't really done anything yet. 75 basis points is nothing in the whole scheme of where they need to go. They haven't even started unloading the balance sheet yet. So the Fed hadn't even started. This is all in anticipation. This is all just pre-running, front running what the Fed has done already, which is almost nothing. They still have a long ways to go. And then you have the effects of what they've done and why that needs to filter into the market. So anyways, this looks exactly like this right here, right? And, some people are saying, well, this little pop up here and then final capitulation, this little drop into consolidation and then final capitulation, is what the V bottom looks like. Well, V bottoms are when you have liquidity in the market to rescue it. Right now, there's no liquidity in the market to rescue unless, the Tether printer just starts going off. They're going the other way right now. People are getting out of Tether. So Tether can't print and just start buying like they were doing. There's too much scrutiny on them now. So the days of Tether just printing and buying so they can up their cash reserves, they print, buy, sell, prop the market up, sell so they can build their cash reserves. They can't do that right now. Do Kwon's not out there anymore. A lot of the DeFi stuff has to unload. So you're seeing these things happen. It, drops, kind of holds up, drops again. This is that, area with Do Kwon, but, same thing here, dropped, consolidated, dropped, and then ran sideways before the next drop, consolidate, drop. So what you conceivably could expect is, a little bit more sideways action here in that 19 to 20,000 range before the next leg down, getting back to Bitcoin specifically, that was the hourly, back to this area here where you have so much confluence in that 14,000 range where the market was tested. Well, let's go back to, this is on log scale. Let's go back right here. Here we go. So this is regular scale here into that 14,000 range where you've got, all these touch points at 14,000 along the way where that served as resistance. That could ultimately be support. But you've got this area here right now that Bitcoin is working through. This is a 16 to 19, 20,000 range of market structure right here that Bitcoin is working on before it can drop down and test that, $14,000 range. So this is an orderly distribution unwinding of all the liquidity and the leverage or repricing right now. Same thing that we've been talking about in the traditional markets, right? This rolling over, this steady distribution that's going on in the traditional markets, working their way back down to these pre-pandemic levels, right? That was Dow. This is the NASDAQ, S&P, same kind of thing. Just, this is the SPY right here. This is the Russell 2000. This is the Invesco QQQ. So if you look at all these things, and especially the SPY, and you go back and look at, let's go ahead and get this on the weekly here, the great financial crisis. Let's look at the S&P of 2009, right? Bear market. So nice orderly rollover as the price bounces, consolidates, drops, bounces up, drops, consolidates, drops, just kind of works its way down. And then there was a big capitulation there. But what we're dealing with here is the same kind of thing. This is just an orderly unwinding and repricing. It looks worse than what this is on the weekly. It looks a lot worse when you look at it on the weekly. Look at it on the daily, and you can see, you're going to get these nice little bounces and buying opportunities. Market might bounce. Tomorrow's Tuesday. Traditional markets might bounce a little bit. They might even have an up day before this continues down back towards these pre-pandemic levels in all of the major markets, because stocks are repricing, right? What's a fair PE ratio for a stock given the current interest rate environment and QT with the Fed? But so far, this has been orderly. This has not been a panic situation like we saw in 2018. Okay, let's go back and let's look at the S&P in 2018. And we looked at this the other day. So this is, where did 2018 go? Right here we go, right in this area. So this is that, wait a minute, what are we on here? I need to get on the weekly here. Here we go. Here we go. So this is your 2001. This is the March pandemic right here. Not pandemic, but 2009, March of 2009 was the bottom. That was more fast, right? This was a big drop in the traditional markets over a short period of time. Then you go to 2018, same thing. You had, big drops in a short period of time, right in this area in 2018, 2019 timeframe. And then the pandemic, of course, that's panic, right? Bam, that was a big drop. That was in a matter of a couple of days, 35% drops, whereas these are, 10% here, 5% there, that kind of thing over a couple of days. So big difference between this kind of drop and, this orderly unwinding that we're seeing, happen here, even when you look at it on a daily basis. And, the other thing too is where, you see panic in the markets when you see circuit breakers, right? When the market's down and it's tripping the circuit breakers, when it sells off, I think it's more than 10%, at a time, and they have different levels of the circuit breakers in the traditional market. When you're tripping circuit breakers in the market and they're pausing to slow the selling momentum, that's when you reach panic in the market. We have not seen that in the markets yet. I don't know if we will see it. What the Fed is trying to do is trying to unwind this without that. And that is the soft landing that they're talking about. And of course, Bitcoin, you can see, the panic selling that we've seen there. This is the pandemic, those big drops, over really, this is on the daily chart now. So this is over basically, right here in this area here, just a few days where Bitcoin dropped, 59%, 1, 2, 3, 4, 4 or 5 days. That is a panic. You're dropping 30, 40%, over a couple of days, that's a panic. This is 1, 2, 3, 4, 5, 6, 7, this is a couple of weeks here, right? And that is, 40% over, basically 10 or 12 days. So this is a healthy little drop here because the DeFi space is blowing up and you've got some systemic things happening, but in general, and some, leverage wipeouts as well, longs and shorts getting wiped out. So that's really what's going on. Ethereum's right there as well. So this major market structure level here is kind of holding up, but this is why I do not believe at this time that the bottom is in yet, because we have not seen the market's bottom. We haven't seen that panic selling, haven't seen that capitulation. Don't know that we have to or need to, but I think there's a little bit more shakeout because there's still people calling for all-time highs. I mean, in this environment of QT, rising rates, inflation, the recession, the Sunday talk shows were all about recession all weekend long. There's a lot to work through in the system. A lot of people are calling for a Fed pivot by the end of the year or in July or whatever. There's still a lot of denial in the market right now. Still a lot of people that just are calling for new all-time highs and just a complete V-bottom reversal like we saw in the pandemic when the Fed came in and put $2 trillion in the market. This is a bear market, controlled bear market distribution unwinding. This right here was a panic sell, a black swan event with $2 trillion pumped in the market to bring it out. Very big difference in what's going on right now. We don't have the Fed pumping trillions of dollars into the market. And, a lot of people are calling for the Fed to reverse course and do that right now. It would take, an extreme set of circumstances for that to happen. So these are my thoughts. Just wanted to keep this quick today. Right now, it is my opinion that the bottom is not in. We shall see. Nobody knows for sure. Only time will tell. But what I do know is the Fed is just getting started. They haven't really done anything significant yet. And we are where we are based on the little bit that they've done so far. So if they're trying to do 3 times as much, which is what their target is in terms of the Fed funds rate and rolling off the balance sheet, basically 3 times what they've done so far, market's got a little bit more to do. They've priced some of it in, but they haven't priced all of it in, nor have they priced in the effects of everything and the real economy where it's going to be 3 months, 6 months, from now, because there's no way of knowing. So that's where we're at. Those are my thoughts. I will see you on the next video.